Hello everyone, let's discuss the process of recording financial transactions. But first, we need to remember that the cash book can be part of the double entry system, as well as being a book of prime entry. When this is the case, the impact on the cash or bank account is already dealt with, and no set posting is required to the bank or cash ledger account, as effectively the cash book is forming the ledger account in the general ledger. Likewise, the petty cash book can be a book of prime entry and a part of the double entry bookkeeping system. When this is the case, each column petty cash payment size must be totaled, and the totals of these analysis columns must be entered in the general ledger accounts, as the petty cash book is acting as the petty cash ledger account. Now, let's discuss assets, which are things owned or controlled by the business, available for use in the business. More precisely, a current asset is a short-term asset of the business which is to be used in the near future. In other words, it is cash or something that will soon be converted into cash. On the other hand, a non-current asset is an asset which is to be used for the long term in the business and not resold as part of trading activities. For example, purchase of a delivery van. Examples of assets include cash at bank, petty cash, stock, also known as inventory, business vehicles, and receivables, also known as our credit customers. In some ways, the opposite of assets are liabilities, which are amounts owed by the business. In other words, they are an obligation to pay money at some future date. More precisely, a non-current liability is an amount owed by the business and due to be paid in the longer term, which is normally after 12 months. Examples of liabilities include a loan, a bank overdraft, and payables, also known as our credit suppliers. Now, let's discuss capital income, which is income from the sale of capital assets of the business, also known as non-current assets. Examples include selling business property and selling the company vehicle. On the other hand, capital expenditure is the purchase of or the improvement of non-current assets. Examples include buying a business computer and fixtures and fittings. Also, revenue income is income generated from the sale of goods or services. Examples include when the business sells their products. On the other hand, revenue expenditure is the day-to-day running costs of a business. Examples include rent, salaries when the business purchases products, and the costs of delivering goods. Now, let's discuss the purpose of the trial balance, which is used to list all the ledger accounts in the accounting system and is used to check that transactions have been recorded correctly in the double entry system before the preparation of financial statements. And as ever, thank you for watching.